Hello, welcome to the European Open Briefing for Thursday, March the 1st. I'm Rafi Rajan, currency analyst, and we're going to be taking a look at the latest developments in the currency markets today. The US dollar is extending its gains following the hawkish remarks from Fed Chair Jerome Powell on Tuesday before a House committee. This has put majors under pressure, particularly the euro and the pound. The euro is also struggling following yesterday's inflation numbers out of the eurozone, which showed the eurozone CPI falling to 14 months low. The pound is facing renewed Brexit risks following the publication of the EU's draft Brexit withdrawal treaty, which the UK government has rejected. The Australian dollar is also struggling. It slipped earlier today on the back of an unexpected drop in business spending in the fourth quarter in Australia, while the stronger dollar is also putting downside pressure on commodity prices, particularly oil, which fell sharply yesterday. So let's now move on to the US dollar. We can see in purple here in the chart, the dollar index has been steadily rising over the past few days. It hit a 6-week high of 90.74 late yesterday. Dollar is not doing too well versus the Japanese yen. We can see it's actually slid over the past couple of days. It only rose briefly after Powell's testimony on Tuesday, dropping below the 107 level. It yesterday touched the low around 106.50. It's edged up slightly this morning to around 106.80. The new Fed Chair Jerome Powell will be appearing in Congress again later today. This time he's going to be testifying before a Senate committee. The yen is actually rather mixed this morning. It did see some downside pressure from dovish remarks by Bank of Japan policymakers, including the governor Haruko Kuroda, but against the yen is finding support from political risks in the US. Yesterday, the White House communications director unexpectedly resigned, casting fresh doubts about potentially another turmoil in the White House, similar to what we saw last year. But also the main concern at the moment is speculation that President Trump will announce fresh import tariffs, this time on steel and aluminium. He already recently announced tariffs on imports of washing machines from China and South Korea. So this has led to concerns about the possibility of a trade war between China and the US. We're also going to have some important data as well, personal income and spending, as well as the core PCE price index, which the Fed watches very closely, as well as the ISM manufacturing PMI. Let's now move on to the euro. We can see the euro has slid sharply from those peaks of 1.2555 earlier in February. It has now dropped below the 1.22 level. It hit a 6-week low of 1.2182. So yesterday we saw Eurozone inflation falling to a 14-month low of 1.2% in February. Although that was within expectations, it does underscore the ECB's view that further stimulus will be needed for a while yet before the ECB can pull the plug on its stimulus program. Surprisingly, underlying inflation remained at 1.2% rather than falling to 1.1%, but the market didn't seem to take much notice of that. We also have a number of risks coming up on Sunday. We've got the Italian elections, where there doesn't seem to be a clear winner, potentially leading to prolonged coalition talks, and so that would add to political uncertainty in Italy. Also in Germany now, we have the SPD vote coming up, the results of the SPD party's vote on whether or not they should approve the coalition deal struck with Merkel's CDU party. That's likely to go ahead. Doesn't seem to be causing too much angst in the markets. The main concern are the Italian elections at the moment. Moving on to the pound, UK is also facing some political uncertainty. Yesterday, the EU published its legal text over the Brexit withdrawal agreement. There seems to be a lot of differences between the UK stance and the EU stance, particularly on the Northern Irish border. The UK Prime Minister Theresa May said that the draft treaty would threaten the constitutional integrity of the UK, and that no UK Prime Minister would ever agree to such an agreement. And on top of that, the EU's chief negotiator Michel Barnier cast doubt over the likelihood of a transition deal. He said that the transition deal was still not a given due to significant divergences between the two sides, although he did say that we are on road to withdrawal, to an orderly withdrawal, but we can see the reaction in the market hasn't been too positive. Sterling has now fallen below the 1.38 level. We had seen previous support around 1.3850, then at 1.38, but now it's currently trading around 1.3757. We're going to have talks between Theresa May and the European Council President Donald Tusk. It's going to be interesting to see whether or not they're going to be able to iron out some of their differences. A quick look at the Australian and New Zealand dollars. Both currencies have fallen sharply in recent days due to stronger dollar. The Aussie came under selling pressure earlier today due to disappointing numbers data out of Australia. We saw business spending dropping by 0.2% quarter on quarter in the final 3 months of 2017. Expectations were for a growth of 0.9%. So the figures weren't too bad when looking at the upward revision we saw in the prior quarter, which almost doubled from 1% to 1.9%. Plus, most business leaders are expecting to raise spending over the coming months. So overall, the data isn't as bad as it looks, but it has put a dent on the Aussie, which was down by 0.3%. It earlier hit a 2-month low of 0.7714. There was some support from better than expected manufacturing PMI out of China. Earlier this week, we saw the official government PMI showing actually that was a worse than expected reading, but the private cash-in PMI actually came in above expectations. And looking at the Kiwi, we did have trade numbers out of New Zealand for the fourth quarter. Exports surged in the final 3 months of 2017, and the country's terms of trade rose to an all-time high. So that did help the Kiwi turn higher this morning. It had earlier dropped to a 3-week low of 0.7184. It's currently now back above the key 0.72 level. And finally, let's have a quick word about oil prices. We can see those sharp drops of the past couple of days. Those losses were mainly on the back of the stronger dollar, as well as the inventory numbers out of the US. US crude oil stocks rose by more than expected last week, and gasoline stocks posted a surprise build. And we're seeing continued increases in US output, all of which is weighing on oil prices. WTI has now dropped below the $62 a barrel level, and Brent crude is trading below $65 a barrel. Although we can see that they have stabilized at the moment, moving above yesterday's lows. And now moving to today's economic calendar, we can see those numbers out of Australia. We also had capex numbers out of Japan as well. They came in at a solid 4.3% in the fourth quarter. We did see, though, the Eurozone final manufacturing PMI being revised slightly upwards. In fact, in February, we're going to have the UK PMI out shortly, and then later we're going to have those all-important US data, plus Fed Chair's testimony at the Senate at 15 hours GMT, as well as a speech by New York Fed President William Dudley. That's it from me. Thank you very much for watching, and have a great day.